Let's get in Rupen Rajguru, Head of Equity Investment and Strategy, as Julius Baer, who joins us on the show. Hi, Rupen. Good afternoon. Thanks so much for joining in. Well, the market's a little bit nervous going by, the global cues in particular, as well as maybe we ran up a little ahead of ourselves. You don't expect a big drawdown on the index because you've mentioned that a lot of money is waiting at the sidelines and maybe now consensus is turning cautious. So normally they get it wrong. But in a worst case scenario, what kind of a pullback can you see on the headline index itself?
Okay, hi, good afternoon, Nigel. So as you very rightly said, this year, everybody has been waiting for two things. One is a correction into the Indian markets, and two is recession in the US. And usually when the entire world is prepared for that, it does not happen at that point of time. Eventually it might happen, but probably when everybody is prepared, it does not happen. So here, the other distinct feature as far as Indian market is concerned, specifically in last 6 months, has been this phenomenal rise in the small and micro caps. While I would not, mid caps have rallied, but the rally in small and micro caps have been kind of amazing. As you rightly pointed out, we just did an analysis roughly as of August end. The Indian mutual funds were sitting on cash of roughly 80,000 crores. All the equity funds plus the balance funds put together were sitting on cash of 80,000 odd crores. So almost $10 odd billion of cash is there. So hence, probably at every fall, we are seeing the buying coming through, plus the SIP of almost $1.5 billion is there. In that context, we don't see a big drawdown at the index level. Probably, as I said, from an intermediate high, always 5-7% correction is given. But I would definitely sound caution bells, specifically around small caps and micro caps, because some of those names have just gone off the roof. And usually the participation of HNIs and retail is very high in that. And historically, whenever people enter into narratives of kind of stories which probably are very short-term stories, it doesn't end up well. So I would caution around that segment of the market.
By the way, the selling is picking up in some private sector financials. So Kotak Mahindra Bank is down 2%. ICICI Bank has slipped some more, edging towards a 3% fall. HDFC Bank, on the other hand, is staying tight at that 200-day moving average. 1550 is the level on HDFC Bank, 1554 on HDFC Bank, and the 200-day moving average is 1550. So in the last few minutes, some of its peers like ICICI Bank, Kotak Mahindra Bank are reeling under pressure, coming in for some more selling, but HDFC Bank has not cracked below the 200-day moving average. Keep your eye on that. Rupen, afternoon, private sector financials, and you've been maintaining that there is value there. Just relatively speaking, they've not rallied as much as some of their peers. Valuations are still fairly attractive. In the financial space, would you recommend putting money to HDFC Bank, which has been a rank underperformer, or would you still stay clear from it till the merger synergies, etc., play out?
Yeah, hi, afternoon, Reema. As you very rightly pointed out, the financials and specifically the private sector financials have significantly underperformed the index. Probably in last 1 year, they have witnessed a significant underperformance. And there are reasons like the merger issue with one of the bank and a change of guard in some of the other bank on the private sector side. So that has led to a huge underperformer of these companies which were very richly valued. So rightly, there has been a readjustment which has happened. So now probably, if you see some of these banks are trading at a valuation which are at say 7 to 10 year low valuation as compared to their own history. And also at a lower valuation, if I were to purely look into PE, at a lower valuation than the index itself. So considering the growth which we expect, and we will look into those banks which has a very good underwriting skills, and some of the banks which you mentioned has excelled historically on that. And probably, as they say, you don't get good news and good price, right? So while there are no good news, but the price here definitely seems to be good. So from a 2 to 3 year perspective, this definitely makes a case to buy into those banks who have historically demonstrated a very strong underwriting skills.
Okay, banks which demonstrated a strong underwriting skills. 170 points lower is what we have, on the index and under pressure after some time. I mean, we are going to be down. Actually, for the week so far, with 1 day to go, we're down about 2.25% or so. So this is, what's going on. By the way, lots of names still, fair bit on the upside as well, although it's not as robust as list. Usually it's a long list of volume-led gainers, which is, a little shorter today. Lots of names, but volumes are a little lacking if you go down. Senco is an interesting company, recent listing, a jeweler. I think I saw a report from MK this morning initiating coverage. 4% higher, 486, 487 on Senco. These names like Sirma, etc. have been doing well. Morgan came out and initiated. There is a TRF, which is a material handling company that is doing well. JP Power out of the blue, 10, 11 bucks, but 3%, huge volumes on that one. There is Nava, which is up about 10% or so. So there is, while it's all mostly red, but there is some green in these names as well. Rupen, any individual opportunities, anything you want to talk about which stand out to you?
So Prashant, when market was in a one-way streak for last 6-7 months, so everything went up. So right now, probably if you look through the macro, which was really supportive for India. So while the macro was always good, the macro has been very supportive and liquidity has been strong. So some of the aspects are seeing some cracks, especially on the macro side. If the oil remains higher for longer, it definitely impairs the government's ability to spend, and that might have a spiraling effect. So in that backdrop, what we are looking into, companies which has valuation support, because probably companies which had earnings support has got significantly re-rated, right? So wherever company has a strong order book, has demonstrated good execution capability, has got significantly re-rated. So we are looking into those segments which has probably valuation comfort, because when the macro turns murkier, the earnings which we analysts have projected in their estimates probably might see some cuts. So we are looking into those companies which has valuation support. So it is across all sectors. So within banks there are companies which has valuation support. Within IT also there are companies which are having valuation support. So across the board we are looking into those companies which have a valuation support, wherein we mean they are trading at a valuation which are at a discount either to its own average or to the markets.
Rupen, final question before we let you go. Since you mentioned IT and pharma, you had a contra call on both of them. They seem to have worked out. Sometimes these calls are a little tricky. Would you now book some profits, or would you hold on to those positions? Because Q2 results for IT companies are unlikely to be very inspiring, and the global environment as well is still in a bit of a dizzy. Will you still hold on to that contra call or book out?
So Nigel, the noise level specifically from the US macro every day changes, right? Like case in point, today we all are discussing what Fed said yesterday, and probably after a few days something else will come up. But if I were to purely look into data, right, because end of the day the Indian IT also depends on how the US BFSI has done. And if I were to take like top 8 banks of US in Q2 posted a 18% growth in their profits. So at an aggregate level, these the reason why they had put a halt or pause on their spending was because there was an incidence of SVB which happened. But the overall earnings wise, they are pretty strong. So net, Nigel, IT as a segment, historically has been around 10 to 11% of the profit pool of the index. It had gone up to almost 14-15% during COVID time, has now come down to 8-9%. We believe it will go back again to 10 to 11%. So while yes, tactically when this big swings happens, it makes sense to take some money off the table. But I would say as a segment, for next 2-3 years, IT definitely, a large cap IT makes a point to be there in the portfolio. And in pharma, just to quickly sum up, it's a second coming for pharma sector, and we are seeing the companies last quarter almost 25% YOY growth we had seen on an average for pharma companies. I think that spillover will be there for 1-2 quarters. So on case-to-case basis, we still are constructive on pharma, but at a big undervaluation is no longer there. So that big outperformance or overweight, we have trended down to more market weight in pharma.
Okay, all right, Rupen, thanks so much for stopping by and filling us in with your calls on the various sectors. Wishing you a good evening going ahead. Well, by the way, there's no real big 3 p.m. move that we were looking forward to. The Nifty, we started the show, it was 19,730. It's around those levels itself. And the Nifty Bank, in fact, that's moved a little bit lower. Now it's at around 44,650 odd. So that's the pain point, really, even in today's trading session. Well, we'll slip in a short break. You come back on the other side, we'll get you some buy and sell calls. Our technical experts will be back with us.